Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Surbiopadhyay and Pavitra Morning. And girls, it looks like it's a quiet Monday morning so far. The Nifty's come off a tad bit from the day's high, but holding that 17,000 handle, a gain of 0.3% on the benchmark indices. And at least there's green on the screen, right? When you compare it with some of the rest of the Asian markets, Chinese markets are down 1%. The Hong Kong market is down 0.5%. Taiwan has red tick going for itself. So at least the frontliners, the large caps are holding up in the green. The problem is the mid caps are selling off. The mid cap index is down 0.5%. The small cap index has fallen close to 1%, more than 1% now for the Nifty small cap index. And this has been the mid cap performance over the last couple of days. It's underperformed the benchmark by nearly 5% in the month of in the month of March. And it's down 6.5% so far this year. And there are so many mid-cap stocks, large ones, which are trading at 52-week lows, fresh ones. So LIC, Tata Power, Godrej Properties, AB Fashion, Devyani International, all these stocks are now at their 52-week lows. So there is some weakness, turbulence that you are seeing in the broader markets. But you would still qualify this as a quiet morning, right?
And I think the market will take quiet with both hands, given the kind of news flow that we had all of last week, right, Reema? I think the critical question for the street is whether the range can hold this week or not, because we're not too far away from the lows. That kind of, makes you a little uncomfortable. So for the Nifty, it's very important to retain itself above the levels of around 16,828, 29 is a specific level. That's the low that we hit. But that zone of 16,830 to 850, that is seen as a pretty critical support by most in the market, and they would hope that the Nifty doesn't break below that. For the Bank Nifty, the 200 DMA is still a good 300, 350 points away from where the index is. And it seems the Bank Nifty is not making a dash to that level in a hurry at all. The 200 DMA comes in closer to about 39,700 odd. And the Bank Nifty is still seeing selling at higher levels. The market is extremely choppy in a very tight and narrow range. So it's not an easy market to trade. You would have to say that. Extreme jagged edges on the charts, whether you're looking at the Nifty or the Bank Nifty. But Pavitra, I guess the banks are not giving any clear support. Yeah. But I think there are other sectors that are making up for it. Other stocks like Reliance, etc., which are doing better off.
Oh, absolutely. Reliance is one of the big supports as comes to the pharma pack is looking good this morning. Once again, it was the top sectoral gainer all of last week as well. It was up around 0.7%, but in terms of the kind of comparison you can see to other sectoral indices, it definitely did well. But take a look at the advanced decline ratio. While on the frontline index, it looks like we do have a little bit of a gain. We have around 670 stocks which are advancing for over 2,200 which are declining. That's the kind of advanced decline ratio that we have. It's only widening right now. All of last week, we saw that the broader markets really underperformed the frontline index, right? So the mid-cap index, small-cap index were down around 2% each versus the Nifty, which was down around 1%. Once again, you're seeing that play out today. So if you can take the chart for today, there you have it on your screen. Again, you're seeing that it is the mid-cap and small-cap pack which are really underperforming the frontline index. The worst performer last week was the Nifty real estate pack. Once again, it is seeing the deepest cuts come through. It was down almost 5% last week. And once again, today, take a look at some of the names, the likes of Indiabulls Real Estate, Godrej Properties. Phoenix Mills is doing today on the back of a brokerage note, but everything else is seeing pretty sharp cuts come through. So this is a pack that, I would continue to look at. On the upside, like I told you, I think Reliance and Pharma is holding up quite well. So that's what the market is looking like right now. But let's move on and bring you some news flow as well. There is a setback for lenders as the Supreme Court says that banks cannot unilaterally declare frauds without hearing. So Ashmit joins us on the phone line with all of the details. Ashmit?
Well, important to establish the background first. Back in 2016 is when the RBI had come out with the circular. The circular very clearly had provided for very strict criteria depending on which a bank could unilaterally account for a borrower's account could be declared as fraudulent in case of willful default and various other criteria. Now, this was the subject of contention. This was the bone of contention. The borrowers, the aggrieved borrowers, had raised the question before the top court, is that a measure such as this is, number one, unilateral, number two, does not allow for even a hearing, and number three, has grave civil consequences as it leads to the borrower not being able to access credit facilities. And this was the argument raised, and this appears to have struck a chord with the apex court. The Supreme Court, importantly, has passed a two-part order. The Supreme Court has gone ahead and has tweaked that RBI master circular and has added two important aspects. Number one, the Supreme Court has said that it is not comfortable with a unilateral declaration by the bank. Towards that end, it has now said that the banks will necessarily have to give a hearing to the borrower before any action is taken in terms of accounting that account, that particular account, declaring it as a fraud. That's number one. The number two is, and this is equally important, the Apex Court has held that the bank, before passing any order, will have to develop its reasons, will have to show the reasons why the specific account is being declared as fraudulent. So both these aspects need to be followed, a reasoned order as well as a hearing, and only after that the banks will be able to go ahead and to declare an account as fraud. Now this will come as a setback to the RBI as well as to the lenders. They have been arguing vociferously before the High Court and before the top court as well that any tweaking of the circular will impact their ability to identify at early stages cases of fraud. So this is something that will hurt them. This is something that will impact them. But the Apex Court spelling it out very clearly that no declaration of fraud without either a hearing or a reasoned order. Back to you.
Ashma, thank you very much for that. This is an important development. But let's focus on the markets and where we are headed. Rohit Srivastava, founder and strategist of IndiaCharts.com, is with us on the show now. Rohit, morning. Everyone's waiting and watching, right? If the 16,800 handle on the Nifty is going to break or no. Are you betting on lower levels, much below 16,800? What's your medium-term forecast on the Nifty now?
So I think there's one word that says it all, and that is fear is the enemy. When the markets are so fearful, that's when you should turn greedy. Easier said than done. But this is the setup that we have today, that, there's too much pessimism on the street, which is why I think the level that you're talking of, 16,800, which has worked pretty well, both as a support and resistance multiple times over the last, 12 to 13 months, is probably going to hold. That's my sense of the situation right now. We are, of course, watching it closely. Even if it did break, 61% of the entire rise is at 16,600 as a worst case scenario. But right now, it looks like 16,800 will hold. And if it does, then we should be looking at, one of the best rallies of this year. In fact, I think we should be at the bottom end of the market for the rest of 2023. So that's a bold statement to make. I think almost everyone I'm listening to has, even the bulls have turned very, very cautious. That is the kind of situation. People are starting to price in that there will be little or no returns or few returns in the rest of 23. I think it will be much, much different than that. So over the next month, I think we should be looking at a bounce back and retest of 17,800 from where we actually fell in the last month. That is the month of March. So that should be the first leg up. The same thing probably in Bank Nifty, we should be looking at a move going back to retest 41,600. But I think on a 12-month basis, this is a wonderful opportunity, I think, for long-term investors to really start aggressively getting positioned in the market, because you don't get to buy such a meaningful dip in stocks every now and then with pessimism, which if measured is equal to or even greater than that seen at the end of the at the bottom of the pandemic sell-off, which is in March 2020. Some of the data readings are much more lower than that now. And so with that kind of setup, I think long-term investors have a great opportunity to get invested on a 12-month basis, not ruling out even an all-time high in the Nifty. So that is, I think, the short to medium-term setup, which I know I'm sounding far more optimistic than what the street is sounding, which is why I said that fear is the enemy, and you need to take it that way.
Okay, Rohit, sounds good. I mean, we can do with an optimistic voice as well, right? And I take your point. Sometimes when you think there are absolutely no triggers and the market isn't going anywhere, buying starts emerging from absolutely nowhere. So help us sort of narrow this down further. If you're expecting the market to surprise on the upside, then which pockets look the most robust on the charts? I mean, banks have been, for instance, a huge problem. They've been the market's Achilles heel. Do you see a turnaround there?
Banks have been a problem globally, but not in India. If you actually look at it, the rally that we saw from June till now is retraced by only 38 to 50%. Okay, so less than 50%. In fact, the Nifty has retraced more, a little more than 50%. So the Nifty has actually pulled back a lot more than banking on a broader basis. So banks in India have actually held out better than what the rest of the world is really seeing in the banking sector, where the US bank index, or the KBW index, has actually fallen to a new 52-week low in the prior months. And there's huge volume. If you look at even the stock chart of Bank of America, we see what I call a selling climax, where volumes are as high as they were at the bottom of 2009, but we are not at those lows, or 2020. So what I call this is a global banking selling climax, because you've got the events. I think most of them are discounted. I don't think this is a contagion credit crisis. I think this was the crisis. Few banks, going under, which can be seen as similarities to the savings and loans bank crisis seen in 1980s. So bringing it back to the sectors which you were asking, I think we stick with the best performers, which are actually capital goods, which have really held out. And of course, there are triggers, followed by defense. So those have been, I think, the better performing sectors of the last 6 months. And we go with those right on top. But follow that up with metals, which have recently been pulled down due to the growth issues. But I think that's a sector that's due to perform. If you just look at prices of the underlying, which is copper, it's almost gotten back to near the previous highs, significant uptick in copper prices. But metal stocks are not reflecting those moves simply because of the negative sentiment. So I think there's a huge gap there. Then, of course, PSU stocks, again, a performer of the last 6 months, should remain on focus. And lastly, power, which has been the theme of most of 2020, should clearly come back. So I think these are the key sectors, and we'll continue to remain focused on picking them up for the medium to longer term.
Okay, got that. Rohit, good morning. Thanks for joining us. Just going back to your point on the banks for a minute, you did say that, globally there's a problem, maybe 4 or 5 banks collapse, but it's been pretty contained to that. Do you think there's a case for the Nifty bank to rally significantly from here? And what part of it do you think will really lead it? Do you think it's the private banks, the PSU banks? And I also want your call on the IT index. Is that something that you would feel comfortable looking at right now, or you would still stay away from that?
So I'll start with the IT index. I do think there could be a worst case situation done here. The risk is really one of performance and outperformance, which is what funds want to look at, whether we should give it top allocation like we were doing in 2020 or not. So the IT index may bounce back. Even if I look at a stock like Infosys, for example, it's almost a double bottom compared to where it was in October. So it's gone back to retest those lows, but I think it could end up being a double bottom. So in that sense, the IT index does have room to start picking up again from here. But will it do as well as it did before is the only question. But it will move along with the market. Now the other point is banking sector generally does well when the economy picks up. We are of course seeing a slowdown, but you can't stay in a slowdown forever. So then should it be private banks or PSU banks? I think a bit of both. PSU banks have come into the limelight after a lot of hate. If you go back 12 months, nobody wanted to touch them. I think they continue to do well in an expanding economy because business continues to happen. So in that sense, you cannot not have banking as a whole participate on the upside. The choice between PSU and private is really individual to individual. Some people think that they don't want to take the risks with PSU banks, but I think they're not no more so dangerous as they were probably 5 years ago. So I would do a bit of both.
Can you talk a little bit more about the global markets? Can India rally and get to its all-time high levels without the support of the global markets and other macro indicators? What is your forecast or expectation on, say, the dollar index, crude, the US markets?
Yeah. I think that's a very important question. People don't always link the dots between what is happening in parts of global macro and global equity. For example, the S&P is actually closed 2 weeks positive, which gets overlooked in the short-term day-to-day gyration. So actually, it's been positive for 2 weeks. The Nasdaq has done even better. It's crossed the 20 and 40-week averages in the last couple of weeks. So you're actually seeing a lot of strength in US individual stock names. If you look at things like Tesla, you look at Nvidia and so on, they're actually doing pretty well. So strength has returned to the US market. The fear has only been around banking, which is the only index which made a new low in the last quarter. So that's one part. Now we look at the macro. What happened to the dollar index? The dollar index peaked in September of last year after, the Bank of England basically stepped in when they had a crisis in their insurance market. And since then, the DXY has not made a new high and in fact fallen a lot. We did see a small rally in the DXY, a bounce back sometime last month, but it started to fall again. And after the Fed's peak has been again weaker. So the dollar index, I think, has topped out medium to longer term. The rest of 22, I would think it will be lower and not higher. The second one is the bond market. You saw bond yields really spike in the early part of March. What people didn't notice is that spike was only in the 2-year not in the 30-year and not in the 10-year. None of them really made new highs in bond yields. So that resulted in what we call as an intermarket divergence, classic Dow theory, which often happens before a trend reversal. And that's what we've gotten now in the bond market as well. So you have a dollar which is falling, you have the bond market which is bottomed. Rising bonds, a falling dollar, both when combined is actually a risk-on environment for global equities. And that's, I think, the situation. The near-term fears are just getting discounted. And I think the macro setup is actually positive, and which is what will actually rub off into, the rest of other markets. And the last one you mentioned is oil. The last leg down we were anticipating for oil was a test of $65 to $62. And we got that, I think, last week. We touched around 64 and bounced back from there. And I think then the worst in oil prices is probably now behind us. So we got a huge dip, almost, I think, 50% drop in oil prices if you see from top to bottom. And that impact you'll see on a lagged basis in inflation. So everybody's watching inflation data. You're going to get base effects kicking in over the next 4 months. So US inflation data will continue to fall pretty hard. And that will end up, giving you a positive cue. Even though oil prices will appear to bounce back from here because they have bottomed, what we'll hope for is that they don't go up as fast as they did last time. So therefore, the effect, is not very, very negative. The positive side of rising oil prices is going to be, stocks which are oil producers, companies like Reliance, which we were talking about earlier, may have finally hit a bottom or a low. And you could actually start seeing, Reliance has, of course, been a dog, and I'm not really giving any recommendation here because we don't give advice. But my sense is that it's reached its 40-month moving average now, which is a very long-term support. And there's a very good case for it going from being the dog to become the front runner in the market. So that's something to really watch out for.
All right, Rohit, you're sounding very positive on many sections of this market, and that voice definitely comes as a breath of fresh air. So thank you for taking out the time and speaking to us today. We hope to speak to you soon again. But with that, we do need to get into our first short break on the show. On the other side, we're going to shift focus from everything that's going on in the world of equities to what's going on with commodities. Manisha will join us to tell us about natural gas prices. Okay, holding up with a 35-point gain on the index, but it is the mid-cap and small-cap packs which are really sort of exerting pressure on the market. So the mid-cap index is down 0.4%. The Nifty bank is also slipping, like we told you, so it is currently seeing a cut of around 80 points. But let's talk about what's going on in the world of commodities now. Manisha joins us to take us through what's going on with natural gas prices. Hi, Manisha.
Thank you for that, Pavitra. Well, yes, we're watching gas for various reasons, especially in India as 1st of April hits here. But I'm looking at the prices, which also are trading at a 1-month lows right now. If you look at the prices itself, we have seen third weekly loss come in for the markets here. And the prices have declined 5% over the week and 22% for the month of March until now. Well, the weak demand due to above normal temperatures has been a reason which has led to natural gas prices continue to decline. And the other is that the US output for the month of March has gained up now to nearly 98.4 billion cubic feet per day, and that has been weighing onto the markets as well. As we get out of winters and get into the spring, there's neither air conditioning demand or heating demand, and that could pull natural gas prices further down is what the street believes. We anyway have come off the $7 high that we saw in the previous year, and we are trading at around $2 or even below that, with the expectation that you could be looking at further pressure coming in. Another reason for that is that the gas inventories in US stand at 1.9 trillion cubic feet, which is nearly 36% higher year-on-year basis and up by nearly 22.7% on a 5-year average as well. So whichever way you look, there could be further pressure coming in for these prices. Okay, all right. Thanks very much, Manisha, for the details over there. We'll take a very quick break on that note. On the other side, we'll discuss market technicals. Ashish Khayal of Wave Strategy Advisors will be with us.
कुछ बचाने आए हो?
हाँ, और बताने भी आया हूँ कि निश्चित आयुष लाइफ इंश्योरेंस प्लान में इन्वेस्ट करने पर अगले साल से मिलेगी गारंटीड इनकम पूरे 40 सालों तक।
कॉल नाउ, इससे जरूरी कुछ भी नहीं।
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
सुशासन विकास रोजगार डबल इंजन की सरकार मोदी योगी की मेहनत से बदला आज नजारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है यूपी की रफ्तार देख कर बोली दुनिया सारी 6 वर्षों का काम दिख रहा 60 साल पर भारी 6 वर्षों का काम दिख रहा 60 साल पर भारी कांप रहे अपराधी डर से छटा घोर अंधियारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है खुशहाली के एक्सप्रेस वे पर बढ़ता राज हमारा है
सुशासन विकास रोजगार डबल इंजन की सरकार 6 साल यूपी खुशहाल
While a general has the power to groom, even in the hottest summers, its sustainable technologies help fight climate change and protect our planet. General, the extreme machine.
तुझे तगड़ा इंसेंटिव मिला है। क्या प्लान है?
सोच रहा हूँ गवर्नमेंट सिक्योरिटीज में इन्वेस्ट करूँ।
बिल्कुल सही सोच रहे हैं आप। अब गवर्नमेंट सिक्योरिटीज में इन्वेस्ट करना आसान हो गया है।
पर कैसे?
आरबीआई रिटेल डायरेक्ट स्कीम में बिना ब्रोकर के आप इन्वेस्ट कर सकते हैं और आपको आपकी पूंजी पर मिलेंगे रिटर्न्स। आरबीआई पोर्टल पर जाइए, मुफ्त में अकाउंट खोलिए और अपने बैंक खाते से सीधे पैसे इन्वेस्ट कीजिए। सुरक्षित, आसान।
रिटायरमेंट के बाद मैं भी यही इन्वेस्ट करूंगा।
बहुत सही कह रहे हैं आप। आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
Welcome back. Well, let's get on to some news from the primary market now. Iconic brand Cello may be looking at an IPO soon. Yash is joining in with the details. Yash, it's been a bit of a dry spell on IPO Street, and Cello is a very well-known brand. I think a lot of people connect with it. So I'm sure there'll be a lot to look forward to on this one. Tell us more.
Well, that's correct, Surbhi. So it's been long since we've spoken about new offers coming into the primary market. Today we sort of start that again, and what a brand to start, reporting on IPO. Cello is the company that we're talking about. What we've been given to understand is that the company is looking to come out with an IPO of itself. As far as the details of the issue are concerned, it's a decent sized IPO. About 2,000 crore is what the company would look to raise through its offer. It's expected to be a combination of both fresh issue as well as offer for sale. As far as the timeline itself is concerned, what we've been given to understand is that the company could firm up its plans and sort of look to file a DRHP with SEBI for its IPO by August this year. And then eventually, once it gets the approval, look to launch the IPO by the end of current calendar year. As far as the process itself is concerned, Cello started engaging with investment bankers. They've in fact appointed GM Financial, IIFL, ICICI Securities as far as managing the IPO process itself is concerned. And to speak about the kind of business categories or product categories that the company is present in, it's quite wide. It's present in segments like drinkware, lunchboxes, cookware, dinnerware. It's also present in light consumer durables, be it air purifiers, vegetable fruit washer, UV sanitizers, bathroom accessories. It's also present in furniture segments like chairs, dining table, desks, stools, storage furniture. And as far as the listed space is concerned, we have many companies which are sort of present in individual segments where Cello operates into. But as far as Cello is concerned, it houses a lot of these different kinds of businesses under one roof, that is Cello World.
All right, Yash, this will definitely be an interesting IPO for us to watch. You know, I had this perpetual joke with Yash where every time I would meet him, he would tell us about some IPO, but it's been a while to that. So, Yash, thanks a lot for bringing us all of the details on this one. With that, let's quickly get you a technical check on the market. For now, we're around 50 points higher. Ashish Kyal joins us from Wave Strategy. Ashish, we're pretty much just below that 17,000 mark. We have moved higher since the open as well. Quiet day, but, you know, we are seeing pressure in the broader markets. How would you read this?
Hi, morning to you and all the viewers. See, if you look at the markets, we can see some selling pressure was there on Friday. And now there is an attempt of recovery. But 17,000 is where the tug of war is actually happening. If you see huge build-up on the call side also and put side as well. So looks like there is a short straddle in play, which is going to keep the market in a range of 17,100 to 16,900. So that's the broad range I think market is going to oscillate between. But with some selling pressure possible in the second half, and we might again move back toward that 16,920 level. And on the upside, crossing 17,100 is going to be very crucial because bulls have to show their power, which they have not done so far in past 2 to 3 days of time. So it's wait and watch scenario. Possible move towards 16,920 can be expected. A good trend will emerge once 16,900 or 17,100 breaks.
Okay, and individual stocks, Ashish, what would your recommendations be?
The first stock on the buy side is going to be Zydus Life Science, and we can clearly see it's about to touch its 52-week high. The overall trend had been very strong. Even today, it's forming a bullish candle. The volumes are picking up and managing to bounce back from that 20 days average as well. So the overall undertone for the stock is positive, and one can create long positions here, keeping a stop loss of 467 for the target of 519. And the next stock on the buy side is going to be Cyient Limited. We can clearly see in Cyient there has been a very strong rise on the Friday session. Even today there is a follow-up action. So if you get any kind of a dip from here towards the level of 1,000, use this as a buying opportunity. Keep a stop loss of 970 for the stock, expecting a target of 1,100 over short term.
Okay, thank you very much for that. New developments coming in. TVS Motors is planning to launch new products in Ghana in Africa. Let's drill it down to some other stocks which are in the news. Lupin is higher in trade as UK regulator issues 0 observations for its Pithampur unit. Ekta is here with the details and the implications. Ekta.
Hi, thanks for that. Well, in fact, it is positive news which is coming for Lupin because the UK MHRA, which is basically the UK regulator, has completed inspection of their Pithampur facility successfully. This inspection took place from the 20th to 24th of March. And remember that one of their Pithampur facilities has been under the scanner when it comes to the US drug regulator. Separately, the company has completed a pharmacovigilance inspection by the US drug regulator with 0 observations or no observations. So the inspection basically includes a scrutiny of practices and procedures for reporting adverse events of Lupin's products. So that too should be a positive read-through for Lupin. Separately, they did also receive an approval for a drug which is related to the treatment of Parkinson's, a tentative approval from the US drug regulator. So things seem to be stacking up well for Lupin today.
Okay, all right, Ekta, thanks very much for all of the details. But the big story that everyone's talking about, Ekta, is really Sun Pharma and this ransomware attack. I mean, it's a pretty new thing that we're hearing happening at this scale. What have you picked up?
Well, yes, I have been working the phones with regards to Sun Pharma. So the news basically is that there was a recent IT security incident which was caused by a ransomware group as per the company. This is further to an intimation they had already made to the exchanges on the 2nd of March. The ransomware group has now claimed responsibility for the attack. Now, Sun Pharma has said that the ransomware attack resulted in a breach of certain file systems, theft of certain company as well as personal data, and the attack has impacted business operations. They expected to reduce revenue in some businesses, and Sun will be incurring expenses with regards to remediation as well. Now, they have not named which ransomware group it is, but unverified reports have named Black Cat /ALPVHV, which is basically the name of this ransomware group. They started operations in November 2021. Interestingly, I was reading about them. They are known to target healthcare as well as public healthcare sector companies as per the US government report. Sun has no comment with regards to this particular piece of news. Now, analysts, however, believe that the FY23 guidance is still intact for Sun Pharma, so the IT incident wouldn't have impacted the FY23 guidance, which is basically high single-digit to low double-digit growth. However, remember that the company has said they are unable to determine the potential adverse impacts of the incident as of now, which could probably relate to further security or insurance or even the possibility of litigation. So this would be a space to watch. FY23 guidance still possibly intact.
All right, Ekta, thanks a lot for getting us all of the details on both Lupin as well as Sun Pharma. The other stock that we're looking at today is M&M. It's actually one of the top losers on the Nifty today as Bank of America has downgraded the stock. So Nimesh is here with the details in our special segment, Standout Brokerage Reports. Nimesh?
Hi, Pavitra. So it's a rare downgrade coming in on M&M. In fact, M&M has been a big outperformer in the auto names for the last 1 year. And today, BofA has downgraded the stock to neutral from buy, and they've cut the target price to 1320 versus 1500 earlier. Even on, they reiterated the negative stance or the underperformer rating on escorts as well, and there they've also cut the target price to 1700 versus 1800 earlier. Now, coming specifically on M&M, BofA believes that in fact they've revised the EPS down by 3% to factoring in a mild tractor down cycle and a cut in the UV volumes going forward. In fact, they believe that uncertain farm outlook, earnings downgrade, and lack of meaningful catalysts are the near-term negative triggers for M&M, and that's going to weigh on the sentiment on the stock as well going forward. And in fact, they believe that the street is overestimating the upscale in the UV business. As far as the tractor industry is concerned, BofA believes, and they've actually cut the volumes by 3 to 4% for FY24. And they say that if that El Nino has to be taken into account, then the decline for the tractor industry could be 8 to 10%. Though that's not the base case, but that's the risk for the tractor industry going forward. So on back of big outperformance, the fact that M&M is a big outperformer, and given the headwinds for the sector, today BofA has cut the ratings on M&M to neutral, and they've cut the target position of the 1320 versus 1500 earlier.
Okay, all right, Nimesh, thanks very much. That's Bank of America getting a little cautious on M&M, along with the Kotak, I think, last week. Even they raised a bit of a cautionary note on the UV growth for Mahindra & Mahindra. We'll take a break on that note. On the other side, we'll put the spotlight on some more stocks that are in news today.
Welcome back. The mid-cap is raising some of its losses, so the mid-cap index is completely flattened out. At about 11 a.m., the mid-cap index was almost down, close to about 0.5%. There you have it. That intraday recovery coming through in the mid-cap space. Let's talk about some more stocks which are in the news. Phoenix Mills is on our radar. Morgan Stanley has initiated coverage. Overweight rating on the stock. Sonal is here with the details. Sonal.
Yes, that's the second one coming on Phoenix Mills in last 7 days. This time around, Morgan Stanley has gone ahead and initiated coverage on the company with an overweight rating and target price of 1,700 rupees per share. They say the company has a portfolio of well-located mixed-use destination malls, and they are also set to benefit from India's consumption growth story. The brokerage says it is in an expansion phase and aims to more than double its rental portfolio next 3 to 4 years, and that is the next big trigger for the company as well. They have planned expansion of rental assets from around 9 million square feet that they had in FY22 to 21 million square feet in FY27, and for that they have been buying lands and talking about more mall expansion as well. This should drive an EBITDA growth of around 27% over the next 2 financial years, and that's why they're bullish on this one.
Okay, got that. Thanks, Sonal, for the details there. We will also look at Nykaa now. Big headlines coming in on Friday with the 5 mid-level executives resigning from the company. Mangalam is joining in with the latest. Mangalam, so what do we know, and would this at all be a concern for the street?
Well, the news came in the dying minutes of trade on Friday, as a result of which the street did not get a lot of time to react to the exit of 5 mid to senior level executives from Nykaa itself, and these include the likes of the Chief Commercial Operations Officer, the Chief Business Officer of their wholesale business, the Chief Business Officer of their fashion division, and a couple of VPs of the fashion division as well. Now, this in isolation wouldn't have been big news, but this also follows a spate of resignations that we've seen starting from August of last year, where, the CEO of the FSN brands business, Reena Chhabria, resigned. Thereafter, it was followed by the CTO, Chief Technical Officer, resigning, Sanjay Suri, that was. Then also the CFO, Arvind Agarwal. And most recently, with their third quarter results, the CS and the Compliance Officer, Rajendra Punde, resigned with effect from February 14, 2023. The company on its part have said that, the company officials, that is, voluntary and involuntary exits expected in a company which has an employee strength of over 3,000. They see some of these mid-level exits as a part of their standard annual appraisal and transition process. Jefferies has spoken to the management and they have a little more insight than what the company has said. They said that overall departure is small in the size, the overall context of the company. At the same time, some departures are based on performance, so they might not entirely be voluntary. The third thing is that with a lot of competitors, ramping up their beauty business as well, Nykaa employees are sought after assets. So as a result of which, some normal attrition could be expected. And the company will replace these with a mix of in-house and external talent. Two things we need to monitor from here on. One, the impact of these exits on their overall employee cost, if they're replaced by employees costing less than the current employees or more than that, and the impact that could have on their margins. And finally, the impact on the company's revenue business performance on account of these 10 major resignations that we know of that have taken place in the last 1 year or so itself. Jefferies have a buy rating on the stock with a target price of 200.
All right, Mangalam, thanks a lot for getting us all of that latest on Nykaa. The stock is down 2.5% right now. It's down around 15% in this year itself. But the other stock that we are tracking is that Crompton has announced a merger with Butterfly Gandhimathi. Surbhi is standing by with all of the details on this one. Surbhi?
So why Butterfly Gandhimathi is in focus is because Crompton has announced merger of Butterfly Gandhimathi with itself. Just to alert, a year ago, Crompton had already picked a controlling stake in the company. Now, this scheme is subject to regulatory approvals, but if it goes through, the shareholders of Butterfly will receive 22 shares of Crompton for every 5 shares held in the company. And post the merger, the shareholders of Butterfly will hold a 3% stake in the combined entity. Now, the indicative timeline for completion of this merger is 12 to 14 months from now. Now, why Butterfly Gandhimathi is reacting is because last year when Crompton bought the controlling stake, the value of the deal was 1892 odd crores and the current market cap of the company is 2300 odd crores, which basically indicates that Crompton has paid 10% less for this transaction. Now, this morning, they held a conference call and some key takeaways from there are that they've reiterated that they expect the transaction to be EPS accretive from FY24. They've also said that till now, they have realized the cost synergies of up to 18 to 20 crores. They further said that in the future, they don't expect all cost synergies to flow to the bottom line. Part of it will be reinvested in the business. They aim to grow the Butterfly business at a double-digit revenue growth. They also said that the current manufacturing setup will not be able to meet the demands for the combined entity. And further, they said that getting approval from the majority of the minority shareholders of Butterfly will be key for completing this transaction.
All right, Surbhi, thanks a lot for getting us all of the details there. The Butterfly stock is off the lows, but still seeing a cut of almost 4%. For the mid-cap index, by the way, we have moved into the green right now, so that one has seen a pickup for sure. We will take a short break now, but when we come back, we're going to bring you excerpts from our conversation with Kaushik Chatterjee, CFO of Tata Steel, so stay tuned for that.
इस बार टाटा आईपीएल जियो सिनेमा पे किसी भी स्क्रीन पे वो भी फ्री। चल भैया।
ICICI लोम्बार्ड बी-फिट कवर से सारी मेडिसिन कैशलेस मिल गई। कैशलेस मेडिसिन झूठ की वे खाद होती है मास्टर जी।
ICICI लोम्बार्ड हेल्थ एडवांटेज प्लस के साथ बी-फिट कवर जो दे मेटर्निटी कवर, कैशलेस मेडिसिन जैसे फीचर्स। इट्स अनबिलीवेबल बट ट्रू।
Celebrated with the big, bold, beautiful Nissan Magnite.
The last hour. anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Co-powered by Bank of Maharashtra. Ek Parivar, Ek Bank. In association with Big Bold Beautiful Nissan Magnite.
From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes. On Business 360 at these times. The commodity markets are in a bull run of sorts.
Whenever the world moves from a recession to growth, there is a surge in demand for commodities.
Where crude, sugar, and metals are surging. Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Has the Indian investor warmed up to commodity in their portfolios? And are there enough instruments available?
Get the complete lowdown on commodities, all the exclusives with analysis and experts from across the world. Commodity champions at these times.
Welcome back. You're still tuned into Trading Hour, and let's now bring you an important voice from the corporate world. My colleague Shilpa caught up with Kaushik Chatterjee, CFO of Tata Steel, to discuss the steel prices, global macro conditions, as well as the impact on their business. So let's listen in to what he had to tell us.
Well, I think last year we had a lot of challenges, both in India as well as globally. But I think as we see now with China opening up, US doing pretty good, I think we are in time where steel prices, the low of the steel prices may be behind us. And we have a very strong demand drivers, especially in India. And India will continue to grow as a country. Investments are happening in infrastructure. There's a huge capital allocation that has been given. And steel is a foundational sector for the country, so you can make your own judgment. Yeah.
What about the steel demand in Europe? What's the scenario like there?
It's stabilized much more than what it was. As I said, the war in Ukraine had a disruptive impact.
Right.
There was also impact on the gas prices and energy prices, which is kind of getting stabilized, not to the level which it was before the war.
Correct.
But at least the volatility has smoothened a lot. And we'll see as to how Europe recovers from the impact and how does the long-term effects of the war get priced in as far as industry in Europe is concerned.
You said strong demand scenario in India, but what about the export scenario? What is that like at the moment?
Actually the Indian steel is largely going to be absorbed in the country if the infrastructure spend is there. There is a certain amount of exports that happen. Exports are also healthy and good, but the focus is always on domestic consumption.
Okay, well, let's take a quick break on that note. We'll come back with more on the markets in just a bit. Well, the markets are firmly in the green once again, and it's getting back to the session highs. About 0.5% increase coming in with an 85-point gain. So you can say that lower levels are seeing buying, and that's a good sign for the bulls. On that note, let's get you some market opinion. Mark Mobius of Mobius Capital Partners on why he thinks Asia could emerge as a safe haven in the global investment universe and why he remains bullish on India and Taiwan.
It's very amplified. I would say in Europe, it's really a problem because of what happened in Switzerland. That is, creating some confidence problems in the rest of Europe. And of course, you've got the Ukraine situation, which is not going away. So in some ways, people are looking more and more to Asia, despite the Taiwan-China situation. People are looking to Asia as sort of a safe haven, so to speak, or a place where you can put money and be relatively safe. Simply because it's the type of companies that we own in Taiwan. We have companies that are involved in software and chip design. In any case, I don't see anything happening in the near future. I don't see that taking place simply because of the situation that we have with the U.S. building up more military power in the Philippines. If you look at the average age in India and the average age in China, India it's about 26, 27. Average age in China is over 30, 37, 36, 37. This is a big difference. And of course, you have a demographic dividend in India, but that's true in other parts of the emerging markets world. You have a younger population, and these are the people that will be growing at a faster rate and contributing to economic growth.
On that note, we're out of time on Trading Hour. From the entire team, thank you for watching.